Alright, so this is going to be our class on how to use our Fibonacci settings for entry. Okay, now that we've mastered our entry model and our time frame for entry is already defined, which is the 5 minutes time frame. After we have marked up our charts from the higher time frame, what we do is that we slide down to the 5 minutes time frame for an entry, right? So I want to move this chart to okay, let's start with US oil. I think there's a good setup we can look at on US oil. Let's clear the chart up a bit. Okay, so let's go higher and start from the top downwards. So this is US oil, right? Now I noticed something on US oil today. Remember we had been selling and our target was to sell US oil to about 68 level, which we finally achieved, a little bit below 68, 67. Now that 67 level is actually a key zone, and that's the previous support zone, right? So price has traded back into a support zone, and there is high chances that there's going to be a reaction from that support zone. Now I can see an old zone here that price can retrace back to. Although price has retested this zone on the lower time frame, this week that we see trading back to it could be a daily retracement or a 4 hours retracement. But on this weekly time frame, price has not retraced to touch this zone before. So what I'm envisaging are some buys on US oil, then maybe a sell to the downside, or we break above this high, we retest and continue to the upside. But for now, my bias is to look for a buy back to this top side. Do you get it? Now, what other confirmations am I seeing regarding that? I can see a candlestick pattern forming. This is Friday. The market is just winding up for the day. So if this candle closes like this, it's already showing that there's a rejection from this old support zone. Price is rejecting from that zone, right? Based on the kind of candlestick we have. So if I see this rejection today, is the point that the market may most likely go up, although we've not seen the final footprint of the market. So for us to know what's really going on, what do? We'll slide down to a lower time frame, right? In this case, we'll do the daily time frame. The daily is clearly bearish. We had this previous support acting as a resistance, price traded into it, and we had this push to the downside. So what we had wanted to see was a continuation to the downside from here, right? But we didn't really get that. Price reversed completely and is back to this most current daily high, which is this structural point, right? So price is back to this structural point, but it has not been broken. So the only time I would have a buy bias back to this zone that we've marked up is if price breaks above this daily high. Upon the retest, boom to the upside. So with that in mind, I was looking for buy opportunities. Can you hear me?
Yes, I can hear you.
Okay, yeah. So I was looking for buy opportunities on the lower time frame back to at least the midpoint of this range. This is a retracement trade I was taking as at that time. And I was taking this retracement trade because I had begun to see changes on the other time frame. That's the what's it called? The weekly time frame. I know we're in a weekly time frame key zone. That's why I could confidently um start looking out for this retracement trade. You know I'm not really a retracement trader. So now that we have these zones marked up, I want to go to the 1 hour time frame to begin to look for these buy setups, and this was it. But what confirmed the buy setup? The break of this high. That was our break of structure, right? Let's tag it.
Yeah.
That's boss, right? So the moment price broke that point, I began to look for buy opportunities. But this was the first retracement that happened in the evening. We didn't have a trade. But on this second day, we had a very nice opportunity for a buy. We had a new break of structure here. This is boss, right? Then we had this retracement. What did it retrace back into? All I can see here is this order block. So I'll mark that PDRE into the future. Price came and retested it. Upon this retest, what do? As usual, we'll mark up the time of the day, right?
Yes.
Let me pick my two. Yeah, so that's London session. Straight to our 5 minutes time frame for entry. Okay, so at the open of London session, what do we see? Price was already clearly bullish even before the open of London session. This was our last 5 minute structural point. Price price demolished it, pushed back upwards, then broke another structure again. And a double break of structure, what does it confirm? It confirms your bias, right?
Yes.
Yeah, so this was another boss here, right? So upon this second boss, what do? We pick our Fibonacci, mark the whole of that range, which was this. Then we wait for price to come back into it. Now, how do we achieve this? It's very simple. Let me do something on this Fibonacci. Yeah, so price broke the high, came back for it. You already know how to place your Fibonacci, right? You place it from the beginning of the swing down to the top of the swing. So 1 will be at the beginning of the swing, 0 will be at the bottom of the swing. And you wait for that retracement to happen. So anytime you're using your Fibonacci, there are two things you look out for. Where is the potential key zone price can trade back to? We have not key zone in the PDRA, we have a fair value gap here. So usually I like to trade into the 5 minutes fair value gap, right? Let's call that an imbalance, right? So the moment price, so what I'll do is I'll place my order a little bit above 50%. Let's put this way. So going long, right? I'll put it here in the midpoint. So yeah, there are times that I would place this order at 0.3. In fact, since you're just starting out, I advise you to use 0.3 more often. Do you get?
Okay. Okay.
I advise you to use 0.3 more often. So place your orders at 0.3. With time, I'll teach you how to bring it down. But since you're using, okay, sorry about that. So yeah, you could, but usually I don't bring it to 50% most of. I don't put it at 0.5 just to cover in for spread and all, right? So I like to put it at maybe the midpoint between 0.3 0.5, just that midpoint. Stop loss exactly below this. Then what's our target? As usual, we target a minimum of 1:2, right? In this case, since this
Yes.
is a buy trade and we know the market is going up, what can we do? We can target two standard deviations, right?
Okay.
Yeah, we know that the market is going up, but we're going to take 80% of our profit, 50 to 80% at we're going to take 80 to 50 to 80% of our profit at 1:2, then we let the rest run. So that was 1:3.58. Do you get it?
Yeah.
Yeah, it's as simple as that. Now let's see if we can find another trade that way. Is that example clear enough?
Yes.
One more example and we are good. So yeah, that was the buy. I don't think I saw any other buy on US oil again because I was only going to trade back to this top, and because it was a retracement trade, yeah, I would have only done 1:2. So what I'll be looking out for now is price reaction from this current zone where it is. For now, I've not seen anything tangible, so I'm just watching the market. I'm just watching. So let's go to GU to see if there is any, if we can find any analysis of that manner. GBP USD. Okay, so this is GBP USD 1 hour time frame. I won't dwell so much on the daily, but you can see that the daily traded back to an old to an order block, right?
Yes.
And we are reacting from that order block. We can already see bullish patterns forming. So we move back to our 1 hour time frame to get a break of structure. Markets misbehaved for a while, then we had news that led to the break of structure. So like I taught you, if there is a major break of structure, mark up the most recent high that is broken. Market may not necessarily come down to that bottom part you are looking for, and that's exactly what happened there. Came back, retested this zone. This was about 8 a.m. We move back to our lower time frame to hunt for an entry. Okay, so let's look at this market carefully. So this was where the major break of structure happened. What do? We pick our Fibonacci. We measure from the high of the swing to the top of the swing, and we're looking for at least to 0.3, right? If we had placed an
Mm,
order at 0.3, unfortunately we wouldn't have been picked in this trade. You get?
yes. Yes.
Stop loss below here, and we ride it up. Our order wouldn't have been picked, but that's not a reason for us to give up. The moment market breaks a second time, we can begin to look for a new entry. And where did that happen? We had a new break of structure. Now I would only try to enter the second break of structure if I didn't catch the first one, but anyone after that I'm always skeptical. So this is it. In this case, it was a very clean trade, but it was close to news time, so we may not necessarily have taken this trade. Do you get it? I mark that zone,
Mm,
placing my order at, yeah, since this is a short, this break is short, I don't necessarily need to place it at 0.3. I can put it at this previous mitigation block, this 5 minutes mitigation block, just above the mitigation block.
okay.
Do you get it? I'm doing this
Yes. Yes.
because this break of structure, everything is just small, the range is small.
Yes.
Yeah, but when the range is wide like this, I would like to do 0.3. Then we can target 1:2 as usual. This is two standard deviation. What do we have? Very nice trade. We know GU is buying, so yeah, two standard deviation is a goal. We are trying to trade back to an old structural point, which is even more, 1:4.31, which is a very good trade. So it's as simple as that. It's very simple. So that's how we use this Fibonacci setting for perfect entries.